Imagine waking up and in one day becoming $70 to $100 billion richer. What would that feel like? For Larry Ellison, that was real. His net worth shot up by tens of billions in a single trading day. But how did that happen? And is there anything we can learn or apply from it? Part 1. Who is Larry Ellison, and what is his background? Larry Ellison, co-founder of Oracle Corporation, a major software cloud database enterprise tech company. For decades, Oracle has been a major player in enterprise software and cloud infrastructure. Ellison owns a large stake in Oracle, about 41%, according to recent reports. Over time, Ellison has shifted Oracle more into cloud computing, data centers, and artificial intelligence AI-driven services. This is a key pivot in recent years. What triggered the sudden net worth jump, part 2 feet here, are the immediate triggers of the surge: outstanding earnings, very strong financial results. Oracle released quarterly results that exceeded expectations. Key metrics, especially in cloud infrastructure and AI contracts, were very strong. Big contracts and future revenue booked. Oracle reported large remaining performance obligations, RPO, that is, signed contracts for which revenue will be earned in the future. One report said Oracle had $455 billion in RPO bookings. Also, there was reporting of a major contract with OpenAI for Oracle to provide computing power, etc., with approximately $300 billion over several years. 3. Investor enthusiasm and stock price surge. Because of the above, investors got very excited. Oracle's stock jumped 0.40+% in one day in after-hours, pre-market trading, and then during the trading day. Since Ellison owns a large number of shares, a large jump in stock price directly multiplies his stake's value. If the company is worth much more because future revenue looks huge, contracts are big, growth outlook is strong, each share becomes worth more. So if you own millions or billions of shares, your personal net worth can increase by tens of billions. 4. AI cloud infrastructure. Boom. The timing is critical. There is a broader trend: demand for AI, data center capacity, cloud computing, and infrastructure services. Oracle had been positioning itself ahead in this field, so the market rewarded that positioning. Part 3. The numbers. How big was the jump and what did it change? Reports say the jump was between $70 billion and over $100 billion in one day, depending on the source. E.g., Fox Business said about $70 billion when the after-hours gains started. Bloomberg, Investopedia, and others report the highest day gain on record in that index, pushing Ellison's net worth past Elon Musk's, at least briefly. His stake, approximately 41% ownership, means that percentage stock increases multiply heavily on his personal holdings. For example, if Oracle's market capitalization increases by $200 to $300 billion, then Ellison's share of that, approximately 41%, might translate into a net worth increase of $80 to $120 billion before taxes, etc. Part 4. What's the secret behind this kind of increase? Now this is where it gets useful. There's no magical shortcut, but there are patterns and strategies that made this possible. Here are the secrets or principles. Ownership. Ellison owns a very large stake in the company he founded. If you don't own something big, you can't see net worth jumps of this scale. Long-term vision and positioning. He didn't just wait for trends. Oracle has evolved. Moving into cloud infrastructure and AI is a forward-looking strategy. He invested in or directed Oracle to invest in capacities that are becoming central in global tech. Focus on future contracts, recurring revenue streams, having large contracts that are signed and booked for future delivery, RPO, etc. Gives credibility and predictable revenue, which markets value highly. Consistency and scale. To get from small to huge, scale matters. Oracle is massive. Ellison's net worth is large in part because Oracle's business is huge. Small companies can't get to that scale easily, but understanding scale early helps. Transparency and managing expectations. When Oracle reported great results and laid out future forecasts, growth in cloud revenue, etc., markets believed it. Managing investor expectations, giving strong guidance, and signing major deals all contribute to building confidence that drives stock price. Riding trends, but early. AI is a current trend. If you position yourself early in a rising trend with real substance that is not just hype, you can benefit massively as the trend escalates. Part 5. Can you apply these methods? What would need to happen? What about me, you, and the audience? Could we apply similar methods? Yes, in a scaled-down way. Here's how. Strategy. What you need to do, what to watch out for. What limits there are. Start or own equity in something big. Either build a business, join a startup with equity, or invest early in companies with growth potential. Risk is high. Many startups fail. Ownership can dilute. Be in a growing future-oriented market. Look for sectors that are rising. AI, renewable energy, biotech, cloud, etc. Trends can fizzle. Timing matters. Must have real product market fit. Secure recurring revenue long-term contracts. Try to build a business where contracts ensure future income, not just one-time sales. Customers can cancel. Contracts must be credible. Negative surprises hurt. Maintain a stake and don't sell out early. If you sell your shares early, you lose the opportunity for a large upside. But holding comes with risk. Also market volatility, regulatory risk, etc. Grow credibility and trust. Quality of business, transparency, performance, forecasting, having a good management team, and delivering on promises. Overpromising or weak execution can destroy value. Scale operations and infrastructure. As your business grows, you need infrastructure, capability, capital, and competent people. A bigger scale means more complexity and more potential for things to go wrong. Part 6. Moral lessons. Such massive wealth increases happen when ownership, growth, scale, and trend alignment all come together. Luck and timing matter. Being in the right sector at the right time. For example, the AI boom was a big part of this. Patience. Often these explosive increases rest on years of work, investment, and positioning. Larry Ellison didn't get here overnight. Risk is part of it. High reward tends to come with high risk. Many try, many fail. But proper risk management, not over-leveraging, etc. matters. Part 7. Possible gotchas. What isn't always told. Net worth increases on paper don't always translate to liquid cash. Just because your stock is worth more doesn't mean you can sell it all without